Good morning everyone, it's Kim from Parts Bookkeeping Services, and you're joining Portos and myself, who is hello Portos, and this is Wallet for Wellbeing tip number 3. So last week I was talking about cash flow, your bank account, keeping a check on it every week, and this week I thought I would take a little bit of time to carry on with the next tip, which is about your VAT compliance and making sure that you pay your bills on time. And probably one of the easiest things to do is actually set up a savings account, or if you have one of the new challenger banks, Monzo, Starling, Tide, for example, they will allow you to set up savings pots, whatever their names are, in the respective accounts, allowing you to set money aside so that it's still within your account but actually not able to spend it until you move it back into your account. So for things like VAT, as a small business, I would suggest most use the actual cash accounting scheme. So that means you don't pay the VAT on any invoices you've made out to your customers until they have paid. So that actually helps your cash flow. I mean, obviously if you're taking money straight away, you're taking car payments as soon as the job is done, then it doesn't really matter. You can do it either way. But for those that have to wait, it's better to do it on a cash basis. So what I would suggest is actually putting aside 20%. Even if you're using flat rate scheme and you're given an actual percentage, I would still put the 20% away. This means you're then saving up a little bit extra money. So you come to year end and you have to pay your corporation tax, there is money in the pot. Another way to do it is actually work out what your net profit is. So especially if you're using an electronic system of some kind, so using Xero, QuickBooks, Sage, any of those kind of accounting systems, you will very easily be able to plot a profit and loss account, look at it through the year, and decide what your average net profit is. Obviously things will change, especially if you've got a good accountant looking after your accounts for you. They'll save you money as where they can. And it's that percentage, the difference between the net profit and what your income is. Divide your net profit by your sales amount, that will give you a percentage. Might be 10%, might be 8%, might be even lower. If you're in a loss situation, obviously don't worry about it. And then that percentage you can then stick away either in the same pot as your VAT or in another pot called corp tax. Obviously then the other thing you have to make sure you do is pay your payroll taxation. This is obviously coming from any wages you're paying your staff, and if you've only got a couple of staff, then you won't actually be paying any employer NICs. So it's making sure you've then got enough in the pot to pay both your taxation out of the staff's wages, anything on top for employer, national insurance, and anything for employer pensions, and make sure that's set aside as well. And that's my top tip for this week. Make sure you have enough money put away, saved away, to pay all your taxes on time. Bye for now. See you next week.